So today's lecture is going to be about the income statement. Where we left off last lecture is we had the T accounts, and I referred to them as ingredients that are going to bake a cake. So today we are going to create the income statement. So the first thing that I want you to realize is to make the income statement, you're only going to use the items that are in the sales, so revenues and expenses column. So sales and your expenses. So think of it like this. We have our ingredients all laid out on the table, and your mother likes vanilla cake and your father likes chocolate cake. So we're only going to use some of the ingredients to make the first cake, which is going to be the income statement, and we're just going to use the revenues and expenses to make that item. So with the income statement, you're going to grab certain things off of this income statement. However, to help you as a guide, we have a page in the map. So I'm going to go back to the map, and we're going to go to page, put in here 27, the balance sheet, the income statement. Okay, so remember the income statement is the same thing as the statement of operations, the profit and loss. Sometimes instead of profit and loss, it's called a P and L because the P is for profit, the L is for loss. And so it's basically telling you what profit or loss your company made. It's telling you how much income you made. It's telling you what happened in your operation. So all of those things are why there's so many different aliases for this statement. So if you're looking at this income statement, and once again the income statement is similar to page, I think it's 287. Let's see if I'm right. So if you go to 287 on your electronic version, your American Eagle Outfitters Statement of Operations, this is going to be what a professional income statement looks like. So it starts with your revenue. So that should be something that's familiar to you now. It then goes into cost of sales. So this would be like your cost of goods sold. Gross profit is something you calculate. And then it has expenses. Okay, so this would be like your wage expense, your other expense. And then it goes into something called net income. And then it has net income per share, also called earnings per share. So I just want you to see once again what the end looks like. So this is like in your cookbook that you got your recipe out of, you being able to see that snapshot of that beautiful cake, that what it's going to look like at the end. This is the picture I want you to see of how beautiful your financial statements are going to look once you get rocking and rolling and know where to place those ingredients at. Okay, so let's go back to page 28. And so what I tell students is that on page 28 of the electronic version, which means it's page 17, because once again we have those pages in the front of the map, so it makes it not line up exactly. You have an example of an income statement. So you don't have to go off of American Eagle Outfitters, because sometimes they may have some items, accounts that don't apply to the statements you're going to be creating. So we give you this as a guide, as a template for what you can use. And so I tell individuals when they first start writing statements, get out the income statement, the balance sheet, the statement of owner's equity templates that are on pages 16. So the page before this page, and at the bottom, of this income statement, there's a statement of owner's equity. So these are the three statements, once again, that we're going to reference early in the semester, and we'll move on to the other statement of cash flow later. But for the purposes of this lecture today, we're just going to be talking about this income statement. So for the income statement, the first thing that you want to remember is in a previous lecture, I talked about this as a video. You're recording, okay? So you're live and in action, and you're taking record of this, all the transactions that happen throughout the year. So you want to know what you sold, what you spent as expenses. You're looking at stuff for the period ended. So because it's not just one day, you're looking at it for the entire period. So you want to have your company name, income statement, and for the period ended, and then put the date. You then have sales, cost of goods sold, and gross margin. After that, you go into a section called operating expenses and operating income, other revenue, and expenses, and then you go into income before taxes, income tax expense, net income, earnings per share. This is the flow of the income statement. I am going to break it down on how to create this, but I want you to know I would recommend on your homework and going forward until you get it memorized, having this next to you until you get comfortable doing it. Okay, so we're going to take this and put it aside, and we're going to dive back into Excel. Okay, so you saw that first item on that piece of paper, so you may want to print it out if you're getting ready to do the income statement with me, or you, and so if you want to, you can go off of just what I'm guiding you this time and use it later, but that first item on that sheet was going to be your sales. Okay, so we're going to take that sales and we're going to put it in your income statement. Now, as you can see on my sheet, or on my screen, sorry, it currently has a, in general, no numbers visible to you. So we're going to first put that title. That heading is very important. And what I tell students is to remember that your statements are going to be external for your shareholders, much like American Eagle Outfitters was used by us. So we were someone that was looking at the company to look at the health of it. We are going to always want to make sure that our writing, our grammar, that no typos are on those external statements. The transactions and the labels of the T accounts can be abbreviated because those are internal. That's how you essentially get the information into the computer. But the statements are what is going to be sent out to your stakeholders, and so you want to make sure that is correctly edited. There's no abbreviations. You're using the full titles and the correct titles. Okay, so the heading is going to be Hot Dogs Inc., so the name of the company. And then after that, you're going to write an income statement. After that, you're going to put for the month ended January 31st, 2021. This is going to be probably the only time in this class that we do a statement for 1 month. Usually our statements are for the year ended. And so, but in a business situation, you could see statements for the quarter ended, which is 3 months. Mind you, if you think about a dollar that is broken into fourths, 1/4 each, those are called a quarter each because it's 1/4 of the dollar. So 1/4 of a calendar year is 3 months. Or you may have it be for half of a year, or you may have it be for the full year. But in this situation, we're going to do 1 month. So we have for the month ended January 31st, the first thing that is going to go on there is going to be sales. And that sales was $1,800. You'll note that at the top of my column, I have a dollar sign, but you do not want to have a dollar sign on all the numbers in the column. The next thing is going to be your cost of goods sold. This can also be called cost of sales. And so that is going to come from your T account, cost of goods sold. So we have now 180 from the cost of goods sold T account. We have the sales T account used, which is $1,800. Then you're going to go to the income statement and you're going to create a line called gross profit. That is calculated, by taking sales minus cost of goods sold, also called cost of sales. So sales minus that cost of goods sold, or if you have it labeled cost of sales, you're going to want to subtract that. Okay? And that is how this number is calculated. The next number you're going to get to after this gross profit is you're going to go into a section called operating expenses. And operating expenses is going to have two items called, the one is wage expense, and the next one is going to be your other expenses. So let's go back to those T accounts, and we're going to grab this 600 from wage expense, and we're going to grab the 300 from other expense. We're now going to total out this section, and it's going to be called total operating expenses. $900. So you just summed all of the amounts that are operating expenses and created a subtotal. The next line is going to be something called income from operations. And income from operations is going to be gross profit minus total operating expenses. This line is mandatory on your income statement, so I just want to make sure you realize that even though it's a calculated line, you want to make sure you always have your income from operations, sometimes also called operating income. You'll also notice that sometimes wage expense can be called salary expense. The term wages and salary are interchangeable in accounting. After you have your income from operations, you're going to go to the next section that is called other revenue and expenses, not to be confused with the account of other expenses. This is a subtitle called other revenue and expenses. And what goes in this account is something called it's going to be interest expense or interest revenue. Where you can find this out is if you go to your, if you're an online student, I have given you this on Blackboard. And if you're a person watching this in a subsequent semester in person, I probably gave this to you in hand if it's not already on Blackboard. And so what you're going to want to do is you're going to go to your content section lecture files, and it's a file called examples of account names and statements. I want you to open that up. And what you're going to go to is that first tab called account names. Now if you notice here, we haven't gotten to the balance sheet yet, so I'm going to collapse that so that we're not worried about that right now. And we're just going to look at the income statement items. So we did sales, and we're now on to other revenue and expenses, and it's other revenue is interest revenue, and other expense is interest expense. So I would encourage you, if you're trying to figure out, you have an account name or a transaction and you can't figure out what section it goes, until you feel comfortable, go back to this document that has account names and examples of where they go. Okay, so in this situation, we don't have any interest revenue or interest expense, so we are good to go in terms of having none. So I'm going to put none. In a normal situation, if you have nothing there, you can just put 0. You don't have to you don't have to put the line there. And then I'm going to put income before taxes. So income before taxes is going to be your income from operations plus any other revenue minus other expenses, meaning interest expense. And this situation, we didn't have any other revenue or expenses, so it is going to be $720. So I'm having you fill it in so that you know how a normal income statement will flow. The next thing is going to be your tax expense. In this problem, we didn't give you a tax rate, but in a normal situation, when you're doing your income statement and when you're doing your homework, you're going to take income before taxes, so this number right above. It's sometimes also called net income before taxes. You are going to take that number and you're going to subtract the tax expense, but how you do that is you take that number times the tax rate. So you would take the 720 times the tax rate. In this situation, we don't have a tax rate, and so therefore the tax expense is 0, making your net income, your final line, become $720. The next thing is going to be earnings per share, is the last item that goes on your income statement. And what this is, it's calculated as net income divided by weighted average shares outstanding. And so it's trying to show what is the portion of income that is related to each of your shareholders. So how profitable were you and each of your classmates who invested in this hot dog company? And so what you're doing is you're taking this net income, so it is going to be $720, and you're going to now divide it by the weighted average shares. So your weighted average shares in this situation, your beginning and ending, you had 90 shares outstanding the whole entire year. As we get deeper into the EPS, you're going to notice when I teach you how to do EPS that you have where if it changes, meaning you issue more shares during the year, you're going to need to weight the different amounts for how many months you had that amount of shares. So we won't worry about that today, but I do want your income statement to be complete. So in this situation, you can take 720 and divide it by 90 shares, and it'll get you earnings per share of $8. After that, you have completed your income statement, so essentially the first cake, and we will wrap up this lecture, and on the next lecture, we will pick up at creating the balance sheet.